Well, when it came to earnings, Ambuja Cements was not a cement company that was left behind. It joined its peers ACC and Ultratech in delivering an extremely robust set of results. And again, commentary from Ambuja was that with the government as well as the RBI assigning highest priority to acceleration of economic growth, they are quite resurgent. They are quite confident of a resurgence in demand across sectors. They expect rural and agricultural sectors to lead the revival in economic activities, and this, along with continued focus on infrastructure development in terms of roads, highways, ports, railways and affordable housing, they believe will support cement demand in the near term. So when it comes to Ambuja, when you're talking about the actual numbers, revenues have jumped up almost 8% on a year-on-year basis, clearly indicating that demand offtake of cement jumped up after the monsoon season, after the pandemic, and not only that, it also appears as though there appears to be some amount of green shoot cement demand after this particular lockdown has ended. Our profitability has jumped up by almost 90%, EBITDA jumped up by almost 54%, and margins, again, if you're talking about the margins, has gained over 700 basis points on a year-on-year basis. When you're talking about the volumes, the key number to watch out for, volumes at close to 5.7 million ton has jumped up almost 8% on a year-on-year basis. It's a big beat. All of the numbers are a big beat when you're comparing it to the ET Now poll and even the normal poll. What is even more encouraging is that the company has come out with an interim dividend of almost 17 rupees a share, which is significantly higher than what the company typically tends to give. So when you're talking about this particular earnings of Ambuja, when you're talking about the operating cost per ton and the rise as far as the margins are concerned, the operating cost per ton has actually continued to reduce, and the company says it is attributable to efficiency improvements and cost reduction programs. Now remember, ACC as well as Ambuja are actually benefiting from the fact that they have a master supply agreement with each other. And the numbers clearly reflect the kind of positive momentum that is being seen. Now, outbound logistics cost is quite lower due to favorable market mix and efficiencies. And if you're talking about the lower input cost and efficiency programs, along with the network optimization, all of that has gained momentum due to the acceleration in the MSA. Operating EBITDA, almost a 55% growth, and the company is also saying that it is looking to utilizing alternative fuels as well. Now when you're talking about Ambuja, ACC and Ultratech, and in fact the entire cement space, they're talking about pricing also being quite resilient, and again this is something that augurs quite well for the sector. Do not be surprised if you again see EPS upgrades, if you see upgrades and you see buy calls being maintained across the cement universe, especially Ambuja Cement.